Welcome to Grow Money Business, the podcast dedicated to helping business owners grow both their wealth and business on their own terms. Here's your host, Grant Bledsoe.
Hello, everybody. Grant Bledsoe here. Welcome back to Grow Money Business. This week's episode is number 97. And this week on the podcast, I wanted to cover my current thinking on cryptocurrency because it's been a few months since we've covered it on the show, and a lot has happened in the crypto world in that time span. Particularly just last week, China announced that it was going to ban all activity in cryptocurrency across the board. If you're a Chinese citizen, you can't mine it, you can't buy it, you can't sell it, you can't do anything. And on the other end of the spectrum, we've got El-Salvador, who just about a month ago announced that it would start accepting Bitcoin as legal tender. So not only can you mine it, you can buy stuff with it, you can sell stuff with it, you can even pay your taxes in Bitcoin these days. So we have more and more countries, I suspect, will be putting a flag in the ground on one side of this issue or the other in the coming months. And we're at a very interesting point. So in this episode, I wanted to share my current thinking on cryptocurrency in general and a few thoughts and observations that I had. I hope you enjoy it.
Hey everybody, real quick before we jump into today's episode, I have been advised by my attorneys to remind you all that none of what you might hear in today or any other episode of Grow Money Business is financial, investing, tax, legal, fitness, or even relationship advice. It's content that you're free to use and deploy on your own terms. And before you take any actions on what we might cover in the show, I really encourage you to consult with your accountant, attorney, or financial planner. If you don't have a financial planner and think that you might need one, be sure to check out threeoakswealth.com to learn more about my firm's planning, advice, and investment services.
Alrighty, so this week on the podcast, I want to talk about my current thinking on cryptocurrency and just a few observations I have that are really interesting from my perspective. It's been probably a few months since we've talked about cryptocurrency on the show, and a lot has happened in the monetary policy world. A lot has happened in the regulatory space, country to country, when it comes to making decisions, setting rules with regard to how cryptocurrencies will be handled country to country. And on the one hand, you have China, who just recently, less than a week ago, as I record this, announced that they were banning all transactions, all mining, pretty much any activity at all across the board that relates to cryptocurrency. You're no longer allowed to mine it. You're no longer allowed to trade it for other coins, goods and services, other currencies, anything really. So they've just carved it out and made it illegal. And then on the other hand, you have countries like El Salvador, El Salvador is the first. I'm certain that others are considering this. They announced maybe a month ago that they're going to go on the total other end of the spectrum here and accept Bitcoin as legal tender. So not only can you use Bitcoin to buy other currencies, to buy goods and services, you can pay your taxes in Bitcoin. They set up all these ATM machines around the country that allow you to, obviously Bitcoins are not physical currency, but you can log into them and trade Bitcoins for cash in this government-sponsored system. And so you have China on the one end that's just outright banned everything that has to do with cryptocurrency. And then you have El Salvador on the other end of the spectrum who's accepting it and adding Bitcoins to the government's coffers. So this is really very interesting from my perspective. Now, like I say, it's been a few months since we talked about cryptocurrency on the show. If you've never heard of cryptocurrency before, I would suggest going back and reading up on it a little bit, maybe listening to a few of our episodes where I took a stab at describing what it is. I am by no means an expert here, but I'm somewhat knowledgeable and am doing a fair amount of reading, trying to sharpen my thinking on the subject. And we did cover it in a couple pretty solid episodes, I thought, here a few months back. So check those out. We'll have the exact numbers and links in the show notes. So at any rate, China is, I don't know if I would say they're off the cryptocurrency bandwagon, but they are seeing it as enough of a threat to declare all cryptocurrency transactions illegal. And this was the primary risk, I've always thought, to being involved in this stuff. There are a ton of really great benefits to the way that cryptocurrencies are set up. You are not subject to the whims of a central bank who might want to print money to monetize government debt and dilute the value of the cash that you have in the bank. It's all decentralized. Decentralized finance, or DeFi, is a piece of jargon that you might hear tossed around. But there is a finite amount of or number of each of these coins you might put your assets in and purchase. And that kind of stability is very appealing to a lot of people around the world who've seen central banks in Europe and here in the United States just print money and print money and print money and spend and spend and spend as a federal government, and just get in this spiral of debt and lost purchasing power over time. So cryptocurrency is an appealing and potentially convenient alternative to this, because there's a stable number of coins. You're not, the coins themselves are not subject to decision making by any one human. It's based on this set of rules that have been put in place by people who, I guess, the founders of the coins would be the best way to describe it. For Bitcoin, the person's name is Satoshi Nakamoto, this fictional character. We don't know if it's an alias or if that's the real name or what the deal is there. Other coins like Ethereum and others, their creators are not anonymous, and those coins have been set up deliberately in a similar way. So at any rate, it's interesting to me because China has been very transparent about their intention to overtake the United States as the leading world power, economically, politically, militarily. I mean, I don't think we're approaching any military conflict anytime soon. At least I hope we're not. But they have been clear that they see themselves as equals on the power spectrum with the United States, and they will not be subordinated any longer. That was the last thing I read about that. So at any rate, you have China that's growing economically. Their trajectory has been steep. Their pace of economic growth has been quite a bit faster than ours over the last couple decades. That will probably continue, even though you have this Evergrande situation over there, which is one of the big real estate developers who is struggling to pay debt and is going toward bankruptcy, it looks like. So that could drag down economic growth over in China for a short period of time. Right? Perhaps it's as many as a couple years, but longer term, structurally, China is in a place where they will probably continue growing faster than we will. And at some point in the next 10 or 15 years, overtake the US as the largest world economy. And they've been very clear about that. We in the United States have the exorbitant privilege of the US dollar being the world's reserve currency. And in China's quest to overtake the United States on the world stage, they want their currency, the yuan, to be the world's reserve currency. And what I mean by that is pretty much anywhere you go in the world, if you need to buy goods or services, other people around the world will want to hold US dollars and will be willing to transact in US dollars because it's a long-term store of value and is so widely accepted. And that fact alone, that so many other people around the world who have nothing to do with the United States whatsoever are willing to accept our US dollars for their goods and services and pay us in US dollars for our goods and services is just a massive economic privilege. And it goes back to World War II, the Bretton Woods Agreement is the history on this, is as far as how long the dollar has been the world's reserve currency. Before the dollar, it was the British pound. Um, and it just affords us as a country a whole lot of these economic privileges. Not only is it good for us as citizens, for the United States government, we have the ability to borrow a lot of money because other countries are transacting in US dollars. They're willing to lend the US government money by buying our bonds, which is part of the reason that we're able to spend so much and so much more beyond the amount of revenue that we're taking in as a government. It's because a lot of investors around the world, foreigners, foreign pension and sovereign funds, pension funds here in the United States, people like dollars. So we're willing to lend dollars to the government in the form of government bonds. China wants that privilege, to be totally frank. They want the UN to be the world's reserve currency. And the more economic power they obtain, the more non-Chinese people and governments and organizations are doing business and transacting in China, the more widely accepted the UN will become. And at some point, if the economic scales tip too far in that direction, the UN will at some point become the world's reserve currency. And the way that this thing typically works is there's no like formal agreement that each country in the world signs saying, yeah, we'll accept US dollars or Chinese yuan. It's the ease of trade and the long-term store of value that make people and governments and organizations comfortable with holding that currency. So you can have more than one. The euro, the Japanese yen, those are both considered reserve currencies as well, because most organizations are really comfortable holding them. So that's the background there. And so the risk with cryptocurrency has always been that across history, governments want to control the purse strings. They want their currency to be the one that's used by its citizens because it allows the government to borrow, spend beyond the amount that they're bringing in tax revenue. It allows them to continue growing power, the government's power on the world stage. From the government's perspective, they don't like competition to their own currency. And so it's not surprising to me that a country like China, where the Chinese Communist Party just rules everything, it's not a democracy where you have representatives voting to make some of these fiscal and monetary decisions. You have the Chinese Communist Party that's doing whatever is in their best interest and not taking no for an answer. So there's been a lot of activity in the cryptocurrency universe coming out of China. A lot of people in China have been mining it. They've actually been doing interesting things with the price. I read something that there was some area in China where the price of electricity went up substantially for some reason. And so it went up by enough to force cryptocurrency miners who have these elaborate computer systems set up to mine cryptocurrency. And that's a subject for another day. We covered that in a podcast episode here a few months ago that we'll link to in the show notes. But because the price of electricity went up, these miners actually moved their setups, their computer servers and so forth, to this remote location and set up some hydroelectric energy system to where they were in like cabins along this stream, and capturing electricity through hydroelectric means from the stream to fuel their elaborate mining setups and turn the lights on in the cabin and that kind of stuff too. So there's been enough of that to where enough activity that the Chinese government has stepped in and said, no more. We're not going to allow any more mining. We're not going to allow any more transacting in cryptocurrency, because they haven't expressed this, but it's the only reason that I can think of, because it threatens the power that we have as a socialistic government, and it threatens the power of our currency that we want to continue growing power for the benefit of our country and for the benefit of the party. So it's really an interesting thing, because you would think that every country would want that and come to the similar conclusion, right? And that's not how it's playing out whatsoever. Because on the other end of the spectrum, you have El Salvador, totally different position economically, totally different position power-wise, militarily. I mean, anything that you can think of. El Salvador is just more of a developing country than China is the best way I can put it. Their GDP is a fraction of China's, a fraction of the United States, and they're trying to do what's best for them and their people, like any country is, like any government organization is doing on behalf of its citizens, or at least we'd like to think. So El Salvador decides to accept Bitcoin as legal tender. So now you can go to the grocery store and buy food with Bitcoin. You can pay your taxes in Bitcoin. The government is actually using funds that it has in its central bank to purchase Bitcoin and put it on their balance sheet. And they're basically setting up this governmental system where they're encouraging all citizens to transact in Bitcoin. And from El Salvador's standpoint, it's kind of like it, if you're down by I don't know, 20 points in a football game with 10 minutes to go in the fourth quarter, you probably have to throw a couple Hail Mary passes and maybe kick a couple onside kicks, none of which have very high success rates. But if you want to win the game, those are the measures that you have to take. Right now, if we're looking at the scorecard, power and political power and economic power wise, China's up by 30 or 40 or 50 points on El Salvador. And so it's a very risky thing for El Salvador to do this for a number of reasons that I'll explain in a moment. But if Bitcoin continues to be adopted worldwide before the countries in power basically outlaw it, then it will be good for the country net net. So they're throwing Hail Mary passes is the takeaway that I get here. And it could potentially be good because, number one, the country is going to, if they're going to accept Bitcoin as legal tender, they're going to be transacting a lot in Bitcoin and exchanging their country's currency, which is the colone, for Bitcoins. And I'm in the process of writing a blog post on this topic because it's so interesting to me. But El Salvador has had its currency pegged to the US dollar for quite a while. And it's gone in and out of this currency peg for a variety of reasons. But if Bitcoin continues taking off, and the country owns a lot of Bitcoin because it's accepting tax payments and otherwise from its citizens and its companies and its organizations, well, that's good for the government. So it's potentially good, but it's a Hail Mary pass. And if enough countries in power decide that Bitcoin and other cryptocurrencies become too much of a threat to their currency, and countries in Europe, Japan, Australia, you think of the G20 countries, the United States, Canada, Mexico, if more countries with more powerful currencies decide that it's too much of a threat and follow China's example and outlaw cryptocurrency, then it drives the price down. And if it does end up going to zero, which a lot of people feel like it will, that's really going to be challenging for El Salvador. But they have a young president. I think he's in his early 40s, I want to say. And he's okay taking risks, apparently, and throwing a couple Hail Mary passes. So I can't help but think that more countries will make such a declaration one way or another over the next few months as this thing continues to materialize and evolve. And I would think regionally, it's not that, it wouldn't be that surprising to me to see more countries in Central and Latin America follow El Salvador's lead, more countries in Asia following China's lead. Mostly because China does wield a lot of power over other Asian countries, and a lot of them don't want to cross China for one reason or another. So it's possible China exerts some pressure on them to acquiesce and make it come to the same decision that they did. Who knows what the United States might think? But I wouldn't be surprised if we didn't outright ban it, but made it more and more challenging to transact in Bitcoins from maybe a tax standpoint or an operational standpoint. For as many benefits as the blockchain and cryptocurrency has long term for our monetary system, I just can't get over the fact that it's still a threat to the US dollar. It's a threat to the Chinese yuan, as we're seeing. They've decided to ban it, and I would not be the least bit surprised if other countries followed suit. Now, the other thing I was going to mention in the episode today is that one of the main things I think standing in the way of cryptocurrency in general, Bitcoin and Ethereum, and maybe a few of the other top coins, really becoming, really gaining a lot of credibility and more permanence and viability. I think one of the things that's standing in their way is widespread adoption at the institutional level. And what I mean by that is in the financial system, you have all these different, you have governments, you have companies, you have institutions, you have individuals all transacting in the same marketplace, buying and selling stocks and bonds and funds and real estate and all this stuff. And our monetary and banking system is, I don't know how it would be split up in terms of how much of each of those parties, or how big each of those parties' slice of the pie is. But institutions are a large one. And you think of endowments and pension funds, those are two of the largest pools of money that exist in the world. I live here in California, and the Public Employees Retirement System, CalPERS, and the State Teachers Retirement System, CalSTRS, are two of the biggest pension funds in the world. And by and large, institutions have started to dip their toes into cryptocurrency, but they haven't really jumped in full steam ahead yet. And the main way that, as I understand it, institutions transact in Bitcoin is not by going out and buying Bitcoins, but buying futures contracts through the Chicago Mercantile Exchange, which is interesting in and of itself. Well, the reason I'm bringing this up is because you have Bitcoin, you have Ethereum, you have all these other coins, and there's been a lot of talk about, yes, we have cryptocurrency in general, is the technology, the potential is very cool, but it's a threat to governments. How long will it stick around for? There's this ongoing debate about whether this has staying power in general. And then another debate going on is, of all the attention being put into cryptocurrency in general, is Bitcoin going to be the ultimate coin? Are other coins even relevant? Why do we need so many coins? There are Bitcoin maximalists who think that Bitcoin is the only one that we should even spend time thinking about, and all the others are going to go to zero. There are Bitcoin minimalists that think that yes, it was the original cryptocurrency, and yes, it's been great, but it's going to zero, and some of the other coins are really where it's at. And so institutions have dabbled in this space predominantly by accessing the futures markets. And it's I would think that counterparty risk is a big piece of that. Big institutions probably don't feel comfortable having accounts at like Coinbase and places like that. They probably don't feel comfortable holding tokens or coins on their own balance sheet. But the Chicago Merc has a lot of credibility. It's been around for a long time. We're comfortable transacting with the Mercantile Exchange as a counterparty. So you get the same exposure to Bitcoin by buying futures contracts on them. And therefore, it's a way to mitigate what's called counterparty risk. Well, there's this article by that Forbes published here last week that basically said that from a volume level in the cryptocurrency markets, the most volume is in Bitcoin, the coins themselves, buying and selling of these coins. But the second highest volume space in the crypto markets is through the Mercantile Exchange on these futures contracts for Bitcoin. And then behind that, behind the futures, Bitcoin futures contracts, you have all these other coins. Well, number 2 and number 3 have switched recently. And since China has announced its crackdown, apparently all the institutional money is less interested in the Bitcoin futures and more interested in Ethereum. And that's very interesting because some of the benefits of using cryptocurrency in general, some of the opportunities and possibilities of what it could potentially do in the marketplace and in society really revolves around Ethereum more than it does Bitcoin. And a lot of people out there who are building platforms and businesses around cryptocurrencies are doing it on the back of Ethereum because they don't want to be building on top of Bitcoin. I know it's a little bit vague. One example is my family and I just bought a house in the last 6-9 months, something like that. And when you're buying and selling real estate, you have an agent who acts on your behalf predominantly. You have a title company. You have all these other intermediaries, and it has to go through so many steps, and so many people get paid in that transaction to get you from bid to ultimate sale and closed transaction, that it takes a while and it's somewhat expensive. You know, anybody who's ever had to pay closing costs before, you know what I'm talking about. Well, a smart contract basically removes all those middlemen. And what you can do is both sides would put money into an escrow account, and then the money gets released only if certain milestones happen. And rather than needing a title company to tell you whether those milestones have occurred or not, you could do that on an Ethereum-based platform. It's called a smart contract. And so the applications for this are massive. In real estate, it would be very helpful. In the insurance industry, it would be very helpful. There are lots of applications I can think of for such a technology. But all of that is based on Ethereum, not Bitcoin. And I don't understand the technicalities and differences between the two coins well enough to articulate why that is. But a lot of the stuff out there is Ethereum based, not Bitcoin. And it seems like the institutions or those institutions that have become interested in this are kind of meandering in that direction too. So just something I'd mention. There was a Forbes article that spelled this out I thought was really interesting. We'll link to it in the show notes for this episode. But suffice it to say, we've got more countries around the world are having to take cryptocurrencies seriously. A lot of countries, I think, are really concerned about them because it threatens the power of their countries, like China. Other countries see it as an opportunity to grow power on the world stage by getting into this early at the risk of losing a lot of power economically and politically if it doesn't go in that direction and eventually goes to zero. Who knows whether it will be Bitcoin or Ethereum or one of these other coins, or whether it'll be a mix of all of them, or whether none of them will be relevant. It's still a rapidly evolving space. But the takeaway that I wanted to point out is that we have countries putting a flag in the ground on this one way or another, and they're totally opposite sides of the spectrum. So just talking through this, it would make sense to me that maybe 36 months from now, the only countries that are accepting it are countries who do not have currencies with any global transactional oomph or power to them. And therefore, because those are the only countries accepting them, Bitcoin and other cryptocurrencies become some kind of second-rate, world currency that the powerful countries are not willing to accept. Who knows? I'm far from an expert here. At any rate, that's the episode for this week. I hope I kept everybody's attention and didn't ramble on for too long extemporaneously on this stuff. You can tell I'm reading on this, but it's not my area of expertise, and I've got a lot of work to do to figure out how it impacts the markets and portfolios and our clients, of course. All right. Thanks for listening. Talk to you again soon.
Thanks for tuning in to Grow Money Business, the podcast dedicated to helping business owners grow both their wealth and business on their own terms. Be sure to subscribe to the podcast on iTunes, Google Play, or wherever you digest podcasts to ensure you don't miss out on future episodes and announcements. And feel free to submit questions to growmoneybusiness.com.